Friday, February 9th, 2024, Monaco 64, home of alternative economics and contrarian views. We're going to go through things a little differently today, see how that goes. But the main topic for me today would be the fact that Vladimir Putin, president of Russia, said that actually America itself is shooting itself in the foot in terms of the dollar. And by America, he meant, of course, the American establishment, the leadership over the last couple of decades or so. And I stayed up last night because, yes, it was at 11 o'clock here where I am in the UK to listen to the whole Tucker Carlson interview of Vladimir Putin. And it was exactly 2 hours, 7 minutes and 15 seconds, I think, something like that. And I'm not going to do a summary of it because I think you should, if you haven't watched it, you should watch the whole thing. But yes, that's one of the main things he said about the dollar, that the use of sanctions. And he mentioned as well the national debt, that it's over 33 trillion. Well, it's actually over 34 now, but I don't expect him to keep track of it. Trillion by trillion is changing so quickly, right? And he mentioned, of course, the fact that they're using, they've weaponized the dollar. And yes, he said he's not against the dollar. Prior to 2022, he mentions that Russia did 80% of its international transactions in dollars and euros. But of course, now they've had to transact in the ruble and the yuan. And he said that wasn't his plan, of course. But yes, I highly recommend you watch that interview. And I'll give you like a little brief summary, though. He gave us a great history lesson, which all of you know I love history, and I think you need to look back at history to see how things really are developing today. History is really important. There's the old saying that those who don't know their history, will keep making the same mistakes, those who don't learn history. And he spent a lot of time going through the history of Russia, which is like 1,200 years old, to basically try to explain where we're now. The other thing that I thought was very significant and really puts former Prime Minister Boris Johnson in a very bad light is that there was almost an agreement. It was provisionally signed by the Ukrainians in Istanbul and the Russians to stop the war. And I think that was a few months after it started in 2022. And the Russians as well withdrew their forces from near Kiev. That was one of the conditions. But then Boris Johnson went to Ukraine and told the president of Ukraine not to go ahead with the peace. And I think, and Tucker Carlson asked him, why do you think he did that? He said, I don't know, but we were ready to make peace, and they still are. So yeah, Boris Johnson, I mean, I had heard about that, but of course, the mainstream media in the West will deny that. Boris Johnson a few weeks ago denied it as well. He basically said, I just told him he needs to think about it, him, Zelensky. But I think it was more forceful. A lot must have been promised to President Zelensky. So that was, I think, for me, the most important parts. Of course, the dollar is important because that's what we focus on here, economics. And it's only going to hurt, unfortunately, the American public and also everyone in the West because we're highly dependent on the dollar. And if you don't understand why, I recommend you go to my Bretton Woods playlist and go through the videos to see how important the dollar has been since the tail end of World War II. So yeah, we're shooting ourselves in the foot with the dollar and the pound as well, and the euro. That's from Mr. Putin. So, as I said, I'm going to do it a little differently now. So we're going to go through some topics as well that I've seen that I think are important. The first one is from this article here on Fortune magazine. And it's about Paul Tudor Jones. So it says, legendary investor Paul Tudor Jones says a debt bomb is about to go off in the U.S. with fast pouring consumption like crazy. And I've been telling you this, that yes, the GDP in the U.S. looks good. It's growing it grew at 2.5% in 2023. I know the GDP for the fourth quarter was 3.1%. But on an annual basis for 2023 it was 2.5. So this is what the article says. The U.S. economy may seem like it's firing on all cylinders, but underneath the surface, a debt bomb could be on the verge of exploding, according to billionaire hedge fund manager Paul Tudor Jones. The esteemed investor said in an interview with CNBC that he couldn't deny the economy was strong, but it was actually on steroids owing to massive government spending and borrowing. There you go. We've got 6%, 7% budget deficit. We're fast pouring consumption like crazy, Jones told CNBC. So I'm going to stop right here and I'm going to move on. I'm going to move on to the FDIC, the Federal Deposit Insurance Corporation. They are the corporation that was created in 1933 to basically insure deposits of American banks. Depositors' funds. Of course, they supposedly insure up to $250,000. Of course, if there were to be a systemic crisis where all banks were in trouble, they wouldn't have enough funds, of course, to make all the depositors in the United States whole. But the reason I'm bringing them up is that in the last year or so, we've been focusing a lot on their reports because it's showing that the banks are sitting on huge unrealized losses from their securities holdings, something close to like 700 billion. And they publish it around 55 days after the end of the quarter. That's what they say on their website. So the fourth quarter report should be coming out around the 25th, 26th of February. So I think it's going to be an important day to see how the banks are doing. We know already they're kind of in trouble. So that's the other thing I wanted to talk about. The other thing I wanted to talk about is UK interest rates and mortgage rates. We know that in the last few months, especially since October last year, interest rates, government bond rates have come off, but now they're picking up again, and that could mean trouble for people who have to renew their mortgages and people who took on a mortgage at very low rates during the post-pandemic rush, or even during the pandemic and lockdown when rates were near zero. So that's a problem there that I see for the UK housing market. As I speak right now, The 2-year yield is back above 460. The 5-year, which is another maturity that people fix their mortgages for, the 5-year gilt and the 5-year mortgage is based kind of off that rate. That's also rebounding back up. As you can see here, we're now at 414. So yeah, I think people need to realize that the troubles for the housing market are not over, in my opinion, especially when you look at this long-term chart of the 5-year gilt yield. The downward trend that we've seen since the late 80s is over. And the shorter term chart, as you can see here, the short term situation looks like is due to go back up. We've rebounded off this trend line here, as you can see. So let's move on. Oh yeah, I wanted to touch upon China. There's been reports that China is fighting deflation. Yes, their CPI came out, I think, at minus 0.8 on an annual basis yesterday. And according to the mainstream Keynesian economists, that's deflation. But hopefully by now, most of you that have been watching me for years or maybe for weeks or even months know that inflation is the exorbitant or, massive, or what's the word? Yeah, it's an increase in the supply of currency and credit, not really backed by real savings. And how can that happen? Well, in a fiat currency system, the central banks and the commercial banks are able to do that without really having any savings behind it through the fractional reserve system. So that's what inflation is. In the old days, hundreds of years ago, when someone said you're inflating the currency supply. That, of course, leads to generally to higher prices. It doesn't mean to say that some prices can't go down when there's an inflationary period. And if you look at the China money supply, it's positive. Especially the M2 is growing at 10%. The M1 is a bit lower. So what's going on here? Well, yes, some prices in China are dropping, but generally there is no deflation, which actually isn't good for the general public in China. But I think what the people in the West, the economists and the powers that be want to give you a picture of is that the Chinese economy is collapsing, even though their GDP is close to 5%. I'm not defending China. I'm just looking at the numbers. We have had deflation in the last year and a half because our M2, even though it's rebounding now, the growth has been negative, the growth in M2. So that's what I wanted to cover there. Is there anything else? Yes, and it's to do with China as well. And it kind of explains what's going on, in my opinion, right now. And I've spoken to some people that are based in Hong Kong and China. And it's the demand for gold. It's been really strong, not just from the People's Bank of China. They've added on, actually in January this year, more tonnage. But also the general public, they bought a lot of gold last year, and they've been encouraged by the Chinese government to start buying gold for years now. And why is that? Why don't our leaders encourage us to buy gold? Well, because they don't really care that much about how we protect ourselves financially, and they want to keep the fiat game going. Not that China doesn't want to keep this game going, but I think China knows, and they've been deleveraging the Chinese since 2015. They know there's something up, and this goes back to Putin's comment about the dollar, that the dollar is on its last legs, and the Chinese know that too. So That's why they're buying a lot of gold, in my opinion. They're saving for a rainy day. And again, I'm not a Chinese sympathizer or a Russian sympathizer. I'm just looking here at the facts. And that's why I've been harping about being your own central bank. What does that mean? Well, having your own reserves like central banks of not just gold, but silver, of course. Silver, some people might ask why silver is so low. Well, silver will do even better than gold. It's totally undervalued historically. The gold silver ratio, I haven't looked recently, but it's almost near 100. And historically it should be more like 15-1. So that's where we'll stop here. Yeah, so we'll quickly go through where the markets are this morning. It's 8:20 a.m. London time. We've got gold. Hasn't really moved around that much. We're pretty much where we were yesterday. We're at 20.31. Silver is up slightly at 22.63. The stock market, well, that's pretty much unchanged, except for the Nasdaq is up 0.2%. The currencies as well are pretty much where they were last night, so I won't really go through them. Let's have a look at the commodities. WTI crude, that's picked up a little bit from the last few days. It's back above 76. Brent is back above 80. Well, it's actually at 81.42. Let's see, platinum, that's down a couple of bucks, just below 890. And copper has come off a little bit. There's quite a lot of resistance at that 4 level, even though we haven't even gotten there, but every time it gets to like 390, it comes back down. We're at 372 now. And I told you where the gilt yields were. Let's look at the US Treasury yields. Well, the 10-year yield is continuing to move a little higher. It's at 417. I think that's the highest we've had in a while. The key level there will be 433. Keep an eye on that. That's a really important level. If we break above through that level, I think we could see a little bit of trouble in all the financial markets, bond market, stock market included. So, yeah, with that, I'm going to wish you all a very good day and a very good weekend. Take care. Bye.